You know what time it is? It's trading the trend time. And that's the question we ask ourselves, well, at least on Thursday for sure. What trends are you riding? That's the question. You should always be asking yourself that question. What trends are you riding? And do you like those trends? Are they the best available trends? Now, when we get started here today, just wanted just make mention we got Selva with us, Dom with us, Scott, aloha back to you, BJ, Grace, Bob, Jenny, Scott, Dean, Josh, two Joshes, Gary, Michael, Austin, Richard, and many others. We also got Connie Hill with us in the chat, and we welcome her as well. Say hello, Connie. Now, remember that Connie and myself, we do post educational content on X. There's my handle. Connie can post her link in the chat. That way you can click on it and follow her as well. Now, today's focus, I want to really talk about finding and trading trends. I'm going to kind of talk about a little bit about kind of leveraging, kind of like for short-term moves. We did an example on Coca-Cola on that. I want to circle back to that, but I want to kind of talk about it maybe with a different stock. And I want to kind of talk about leveraging even more than that. Now, when we talk about these things, our also focus is going to be a little bit on commodities here today. Now, as investors, right, you could buy stocks, you could maybe look at some real estate stocks, commodities, right? ETFs is tomorrow. It's not just stocks. So we're going to kind of go into the category of commodities today, and we're going to focus on that. Now, let's go ahead and hop right in. Now, remember when we talk about examples, we will do stock examples and options. Remember that options carry a high level of risk and are not suitable for all investors. Now, when we talk about the information, it's done for general informational purposes only. This webcast discusses technical analysis. That's not the only way to maybe review the market. There's other analysis like fundamental analysis, intermarket analysis that's very interesting, can complement technical analysis, maybe even be, well, I'll leave it to that. But some of us like, I like intermarket analysis, okay? And that's, you go off and look at that, but it's very interesting. But technicals is sure, it's a place to start. Now, remember when we show our examples, we will do those in paper money. When we talk about investing, it involves risk. And today I want to hop right in and I want to look at first, maybe, I'm not going to say it's the chart of the day, but let's just start here. Now, if I pull this up, the chart that I'm going to start with is crude oil. Now, we drew a line, a diagonal line on this, and we said, hey, maybe, is there maybe like an inverse head and shoulders on this? I mean, look, it's not perfect, okay? Left shoulder, melon or head, depending upon where you're from, right shoulder, okay, and then a trend line. Now, let's okay, forget the inverse head and shoulder. Let's just say a diagonal line, right? The diagonal line, now we're looking at the light sweet, we're looking at the prices for October. We're not trading this, but we're looking at the price. The companies we're going to look at are going to be selling into these prices, okay? Now, not just this price, but other months. Now, if you look at this on the right-hand side, there, if we kind of take this line now going forward, today, ding, 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 getting above that line. Now, kind of said before that if this actually does break, we got maybe $90, $95, maybe 101, and many of you are saying, where can I buy a Vespa? Okay, the scooter. Connie has one, I think, and maybe she'll let you ride hers. All right, a little fun there. Now, if you own a gas guzzling car, you don't like to hear some of the things I just said, we're going to have to see if it actually pans out. But crude oil, a little bit on a move. VIX, I can't say necessarily that it's exploding to the upside. The one thing we would have to at least say, the moving averages, the shading is green, which usually means some prices in the market are pulling back. If this chart's going up, more than not, equity prices going down. The one thing we want to kind of make mention of this is a trigger day so far, a bullish trigger. So some might be expecting a little bit more volatility in the marketplace. What does that mean? Stop adjustments, targeting, applying maybe options for protection, all of that, okay? And so now, the one situation that we've been in is when we've had spikes of volatility, they don't last very long and they don't go very high. That doesn't mean that this time is going to be the same, but that's been the trend, and that's what this class is on. When we look at interest rates, now you're an American citizen. You owe a part. This hurts me to say this. Of that $40 trillion that we went over 10 years ago, it was what, half that? $40 trillion? How many zeros are in trillion? The 10-year interest rate continues to grind higher, 4.7%. Again, some people might be thinking, look, maybe I want to have less focus on the US dollar. I want to actually buy something that might actually be able to hold some value, not deteriorate as bad from inflation. Okay. So that's going to be kind of the theme that we actually talk about here today. And if you look at that US dollar, that did knock another new low. So we're talking about commodities from the standpoint of what we're seeing on the rates, from also what we're seeing in the US dollar, somewhat in terms of what we see in the VIX. I do want to bring up one other chart just real quick, is the GC, the gold. If you look at the gold, that did smash its way through that 44.75, and now we're inside the old channel. You know where we're going with that, okay? So this is why the focus is really on the commodities. Now, if we go back to just real quick, let's say jump the sectors real quick, there's energy. Basic materials has not gotten the push. I mean, has it been horrible? Well, but horrible as far as wasting time. It's not just the precious metals in here. If you look at that, you're going to kind of see that it just hasn't really broken out like energy has. Okay. If we go back to, let's say, the real estate, that was a little bit better push on real estate here today, a bounce. This is another thing, maybe a secondary tier. People think there's going to be inflation. They might want to be in real estate. Okay. Also with this, I mean, by the way, is your rent going down? Has it ever gone down? For how long? Okay. And if you look at the IXV, the healthcare, we know that's gotten more expensive. Eh? And if you also look at, let's say, the staples, that kind of hammer back here today. So those are kind of some of the sectors that we're watching. Now, when we look at the SPX-EW, okay, I mean, not much really to say there besides kind of a slight pause. That was a brand new high here yesterday. The Dow Jones is actually falling down. Thank you to Walmart, okay, pressing on that 530. The NASDAQ, if you look at that, it's still falling down. SOX is still dropping down, maybe tighten up a little bit. But probably the one that's been a little not great, or where that kind of maybe the VIX is starting to kind of make investors think about their strategy, is smaller caps did get down below the 3013. Remember, if you think volatility is going to go to the upside, you got to be careful with small caps, right? I mean, right now you get small caps and large caps actually going down. That Walmart position, if we look at this, and we'll look at kind of Walmart, Costco, and Target in just a sec. There's Walmart. Okay, so Walmart, now they did hike the full year guidance. Their estimate was 73 cents, actual was 81 cents. Came in, I believe, lower than expected though, but did hold or raise the full year guidance, but the stock did take out the floor. Now, just really quick, okay? Yeah, as far as what's going on with them, so we haven't been watching Walmart. The one that we've been looking at, let's just start here, okay? Who asked that question? Michael asked that question. The one that we've been watching and investing in is Target, okay? Now, some of you might say, well, James, I go to Costco. Costco kind of had that same look as Walmart did. Let's go back to Target because that's really the area that we're invested in. Now, if we go back to the paper money account, we're thinking that if the market is down, does that mean that the portfolio is down? Well, this is what's kind of interesting, and it kind of depends upon what you're in, okay? Now, if we looked at, let's say today, and I just want to go to the old layout, the margin account, okay? So on a down day of 0.8% for the Dow, Russell down, NASDAQ down, S&P down, you're thinking the portfolio is down. Portfolio is up about 1%, okay? Now, I'm talking about the profit loss for the day. That's what I'm looking at. If you go to the IRA, again, depends what you're invested in, It's up 1,100 for the day. I don't know, 1,100. Let's double check that percent. 169, if we back that out, it's about 0.6% positive. So it kind of goes back to what you're invested in. What kind of really buffered that? The big green John Deere machine. That's what actually helped in that portfolio, at least the IRA. Now, let's go back to just real quick, if we can, and we'll bring that up. I want to go back to Target for just a sec. What is the position of Target? Can anyone actually tell me what it is? What is it? Shares of stock. Sold the call. Now, we know what that is. That's a classic cover call. Not too complicated, right? Agreed to sell the shares at 155. Now, wait. You agreed to sell it for 155 and the stock's at 159, almost 160. Now remember, we're talking about American style options here. So if we agreed to sell it for 155, anyone in the open market can exercise their call, and whoever is short could be assigned. Could be assigned means give the shares at 155. So what we now need to kind of just look at real quick is look at the math of it. Well, if we take a look at this, if I pull this up, I mean, what are we going to do? Well, first thing, it's not a bad situation to be in, okay? Sitting on a little chunk of cheese, cheddar, okay? And I want to kind of just go look at this and see kind of what's the plan now. Now, let me bring this back to just real quick. So what was the shares purchased for? Average, 137.15, okay? So we're going to look at this 137.15 and we're going to kind of see what's the maximum. 137.15. What are we going to do with the position? Okay. And we agreed to sell it for 155. Well, help me with the math here. Okay. 155 less 137.15. The upside on the stock is at 1785, or in other words, $1,785. All right. Now, we pull this up, you're now going to see, let's take that calculator out of the way, okay, did we get a credit or a debit? Okay, when we actually did that right there. 1785 is from there to the strike price. Well, if we look at this for just a second, when you pull this up, did we get a credit or a debit? Well, we collected $630 for the call. Are you with me? And then we paid $570. So it's 60 cents positive, or in other words, $60. So in this case, we really got, let's go back to the pencil here, we really got another 60 bucks. Okay? So the most we can make in this situation is $1,845. $1,845. Now we're asking ourselves right now, how much are we up right now divided into 1845? Now, if we get a number greater than 80%, 90%, 95%, it's going to be hard to hold the position. Okay? So where's it at? Well, let's go take a look. We're sitting here at 1662. So I'm going to type in that number of 1662 divided by 1845. And we're going to get that percentage. And that percentage is, let's bring it up, beat me to it. This is what you're going to be doing when you're practicing this. And if we take a look at this, the number is 1662 divided by 1845. It's 90% of the max gain. Now, so on that position, I'm talking about the stop position, sold the call, and what was the put for? What was the put for? Downside protection. Okay? Now, if we take a look at this, we're now looking at this and saying, okay, was the goal to actually own Target? Maybe. The goal was to own Target to actually make money. So if we're sitting in a position where there's a maximum gain of 100% and we're sitting at 90, the investor might say, look, I got how many days left to expiration? It's 18, so I got about a month left. If we have about a month left and we're at 90%, probably many investors would probably actually say in this case, look, I'm going to take the gains. How do you take the gains? Now remember, if the stock goes to the upside, what happens to the call value? Well, the call value should go up. Well, that call value, if we take a look at this, if we pull that up, the call value, that is what's happened. If we sold it at 630, it's now at 857. It's not a surprise. Stock goes up, call value actually appreciates. If we actually bought the put for downside protection just in case, well, we bought it for 570 and it's down to 141. But where's the gains? The gains are in the shares. Okay? Now, how do you close the position down? The way we're going to show this is we're going to get out of the caller piece first. We're going to right click on it, create closing order. We want to make sure that we take the protection off first. Okay? Now, when we do this, we pull this up. We got a debit there, 729. We're going to see if it fills. Confirm send, note the commission, send the order. Now, when we pull this up, we're not assuming, oh yeah, now sell the shares. We don't want to sell. If we sell the shares now, we have a pending obligation, which is the 155 call. Okay? So we're going to wait for that to fill. We're going to give it 2-3 minutes. If it doesn't actually fill, we're going to go in and adjust the price, and we're going to try to get it to fill. Once we get that to fill, then we're going to go in and sell the shares. Now, question is from Pia, close it out unless the long-term or trend trading, uncover and raise the stops thoughts. So here's the thing. I'm just going to go in through a different type of strategy. Okay. This strategy, the callers, pretty much max itself out. But that is not to say that the investor can't try to maybe get in through a different type of position. Funny you should say that, Pia. So this is what someone thinks. If I have a stock position, I can't, go in and do a vertical. Who says? Who says? Now, what I'm going to do is let's kind of take this from a different route. Let's say we said, example given, look, I don't want a short put vertical. I don't want a cash secure put. I want something that has a little bit more teeth in it, maybe more upside potential. Let's think long call vertical. Well, if I go back into, let's say, Target, and I go back and say, okay, Target. Now, one thing I got to do in this case, I got to be careful not to touch the options that we have, the 155. Okay. Now, if I did that, I got to go really down and look at the 160. Okay. What we're going to do in that, if I look at the spread, it's about 35 cents. Not a big fan of the spread here. Like to see the spreads tighter than 20 cents. If they're wider than 20 cents, it's probably going to be harder to get in and out. I'm going to right click on the 160, the ask price buy vertical. And when we do that, we're going to do the 160, 165. So we're using options to leverage the trend. How much money is coming out of the pocket to do this trade? Answer, $223. Okay, now, so let's say I don't know what I'm doing and I completely forget about this. And all of a sudden I come back and my gosh, what's the most we could lose given the vertical? Answer, $223. What we invested given the vertical. Most we can make is 277. Break even 162.23. Commission 130. Okay. What do we really want? We want the stock to be above both strike price. Stock above both strikes at expiration, max profit 277. All right. Now, trade number one, we're going to go ahead and send that order. Now, I'm going to go back into the orders that we have. Now, I'm going to do this, and I'm going to just kind of change this just for, this is probably not a great thing to do, like probably in a real market. I'm going to go limit to a market. I just want to get that filled. That filled meaning the caller piece. Okay. Now, if I change that to market, there's a really good chance that would probably fill pretty fast. Once we do that, we can right click on the shares, create closing order, and say sell the shares of stock. Now, let's go back to Coca-Cola for just a sec because it's going to play into this other trade example. Now, a lot of times, and if I had $1 for every time someone said it to me, yeah, okay, now the combo fills, sold the call, bought the put. That fills, let's go back. There's the shares, right click, create closing order, sell. That's not that bad. Okay, mid price, confirm and send the order. So the caller came off. We held the caller over the earnings. We do have to say that the earnings reaction was, and that Phil's, that earnings reaction was quite interesting. It goes down quite a bit. How bad did it go down? Let's put this. I always hate when people say, "Man, it crashed." How bad did it crash? It looks like it crashed, but it was down 4%. Okay, put it in full context. Now, it wasn't horrible. By the end of the day, from day to day, it was up 4%. So that earnings, the stock swung like 8% on the earnings. So earnings, volatility, and volume. Okay, and here it is in full form. Now, let's actually go back to just real quick Coca-Cola. Now, Coca-Cola, let's bring this up. Let's show this. Now, there's two ways we've kind of been using the trend of Coca-Cola. Now, first thing that kind of maybe warms the investor's heart is when they look at this table and they see here the trend. Now, the ones that are probably smiley faces are probably this trend 3. Trend 3. Okay, now, if you have, let's say, trend 1, these are probably not smiley faces. This is where you're having unrealized losses. Maybe you gave back profits and so on and so on. And it's not horrible, but they're down. The ones that are smiley faces, Coca-Cola, where's the other smiley face? That's actually broken even. Nope. Yeah, it's down $21. I do want to bring up SLB when we actually talk about some of these energies. Now, what I want to do is let's kind of talk about Coca-Cola. Now, there's one thing that kind of happens is people think, well, if I buy shares, I'm done. Who says? Okay. So we have 100 shares of stock. You bought those shares at $83. They're at $91. It's up 10%. 10%, it's been about a month. Now, go back to when that trade was put on. Let's do that. And if we go back to, let's say, July 14th, when that trade was put on, let me circle the entry so you can kind of see what it looked like. We go back to the 14th. It was right here. Now, on that day, by the end of the day, the candle was red. Maybe when we looked at it, maybe the candle wasn't red. Now, let's say we bought the shares at $83-ish. The stock at the low point went down to $81. Now, for all those people that thought, oh my gosh, it crashed to the downside, lost your shirt, whatever, blah, blah, blah. The stock, for example, went down a whopping 3%. Oh no, it's panic time. This is what people do. The stock moves 2, 3, 4%, and they completely panic and fold like a cheap lawn chair. Here's the thing. We're never going to ride trends, ever. If we can't handle a 3% pullback without completely emotionally folding. Now, James, who did that? I did. That's exactly what I did. At least I had an excuse. I didn't have any coaching. I didn't have any friends really that were talking to me about trading. Look, this was just real. There was no paper money back when I got started. Paper money, never even heard of it. But I look back on that, and it's kind of funny now, okay? But I'd see the stock go down 2, 3% and think the end of the world was here, okay? Just kind of funny. It's not even real. Now, here's the deal. The stock, so we went through the earnings, and the stock shot up, and now it kind of takes some time to really create some support levels, okay? This is just like a relationship. It's not going to be overnight, okay? You got to pop, you got a brand new high, okay? Then it pulls back. And again, if we're talking about trends, trends are not made in 1 or 2 days. I mean, 2 to 3 weeks at a minimum. Now, here's the problem with riding the trends. You're too impatient. I'm looking right at you. I'm looking right at me, my reflection in the camera. Here's the thing. We're never going to have some big profits if we can't let these run minimum 2 to 3 weeks. You have to understand was that when you make a high, it's likely going to pull back, make a low, and you want to see over time new support levels being built in the last 1, 2, 3 weeks. Now, if we look at Coca-Cola, we're still riding those shares. Now, again, let's be disciplined. I don't care what I think, what you think, nothing. The only thing the investor cares about is trading their plan. La, la, la. When people try to give you their thoughts and inputs, you say no spank you. So now when we actually go back and we're disciplined investor, James, this is fun when I just focus on what I want to do. Exactly. So now when we actually go back, let's say we're just riding the trends and we say, where are those stops? Could we raise up the stop? We could. Well, we could down to about 85.71. The funny thing about raising stops is not based upon Sam's point of view, speak the truth, Noro. No, it has nothing to do with that. It has to do with, do we have a target? Let's say we don't have a target. So now what we're doing is we're looking to see, are those intraday lows getting higher? And if we raised up the stop, we're moving up the stop to 85.71. If we had a target, like we talked about yesterday, we already talked about that yesterday, the 1-to-1, 1-to-1.5. But let's say we don't have a target on this. Now, so we can move the stop to 85.71, 85.81-ish. Now, on the call piece, we bought the call for $261 or $261. It's up to $472. Now, if you look and see now, the delta on the call is at 82. Now, if when we bought the call, the delta was maybe 50, 55, why has the delta gone up? Well, the delta's gone up because the stock's further in the money, meaning the stock price is getting higher and higher or greater and greater above the 87.5. Now, that call was purchased on the 18th, 2 days ago. Now, that call is sitting right here at, it was at 261 2 days ago. It's at 475, 472. Now, I remember my first long call example. I bought the NASDAQ. I was scared out of my mind. I thought, I placed the entry, and as soon as I placed the entry, my phone rang, and I thought, my gosh, how does someone know I just did that trade? I didn't even look at my phone. I was that scared. Okay, remember it. No coaching, no class, nothing. Now, the funny thing that I didn't know is I thought, well, geez, now you got to wait all the way to the expiration. Now, we could, just like we're trading the stock without an expiration, we're trading the options with an expiration. And those, just because I bought, let's say, a call 2 days ago, doesn't mean they stopped trading. And that's why they're worth 470 today. The options are still moving based upon what the stock does, etc., time and volatility. Now, if we looked at this and said, well, James, could I try to maybe sell the call? I could, but I'm not going to, okay? But that's an example for 2 days ago. We've kind of been talking about this idea of leveraging a trend. Now, I want to go back to one example of leveraging a trend, and I want to go look at the example of Mondelez. Now, Mondelez, you look at this and you're like, well, geez, this has kind of gone a little sideways a little bit. But I want to kind of look at this. Now, the other day, so no one has ever said this to me, but I reflected upon it, and I thought it was kind of interesting. Someone said to me, yeah, every time James is talking about buying stocks at resistance. Now, remember, the next day, yesterday, I said, hey, we don't mind to buy stocks at resistance if there's higher lows. Now, remember, the Coke example was buying a call, which is the right to buy the shares at the strike price. Now, option number one, just trade the option value. Option number two, I don't want the option. I want the shares. All right, right click on that position, exercise the position, buy the shares at the strike price. Need the money to buy the shares. Now, let's say we said, look, I don't want to just have that long call by itself. I don't like that where there's negative time decay, negative theta. The negative theta is probably not horrible as long as the stock price is moving to the upside. Offsetting some of that or all of it, we need the stock to move to offset that time decay. All right, now let's kind of talk about maybe how to increase the delta even more and maybe neutralize-ish that theta. Now, what I'm going to do is let's go look at Mondelez for a second, 3-year weekly chart. And if you look at this, we're kind of sitting in an example of maybe might it try to go up. We don't know. I don't know what's going to happen in an hour, okay? Here's the deal. If I look at this, I'm going to go to Mondelez and say, okay, we're going to buy the call. And we already did this, okay? We bought that. We're going to buy the at the money call. with at least 20 days to expiration. Now, 29 days. Now, I'll look at the Octobers in just a second. Some of you are saying, James, go look at those Octobers. I feel you. Then what we're going to do is on this other side is we're going to come to the same strikes on the right-hand side, the put side. And we're going to go look at the 62.5s. Now, if I right-click on there, go buy, and then go, let's say in this case, collar synthetic, there it is right there. So the debit, how much money does it take to get into this? Well, cash out of pocket, $223. If we sell the put by itself, we know, smell that? Something doesn't smell right. What's wrong is that 62.5 has an obligation. And that obligation is if we did this in an IRA account, they're going to want to set aside, if I did this in an IRA, they're going to want to set aside $6,400. So what we're going to do is we're going to do short, wide, put, vertical, and then add that call piece. Now, if I just did this by itself, and I want to bring this up and analyze for just a second, if I looked at this diagram, this risk profile diagram, this is the profit loss diagram. If the stock goes up to the right, goes down to the left. Now, if we looked at the delta, if I just did the 62.5s on both sides, calls and puts, 98.40. So if the delta is bigger, we're at greater sensitivity, profit or loss, if the stock goes up or down. But wonder if we go 2 contracts. Now it's 196. Wonder if we go 3 contracts, 294. What if I go 4 contracts, 392? What if I go 5 contracts, 490? So let's say the stock goes up $1. How much should we be up? About $490. Stock goes down $1. How much should we be down? About $490. Now, here's the thing. We don't always need the positions to move big if we're swinging a big bat. I mean, position size, okay? Now, here's the deal. Some of us have capital, big amounts of capital, okay? Not just trading little 50 shares, okay? 500 shares, 5,000 shares. I mean, look, some of us are at a different stage of life, okay? Now, if I look at this, what I want to do is I want to kind of take a bigger trade. Now, by the way, I'm going to go down to the October. I don't have the Octobers as far as monthlies. I'll go to December's. I'll even look at that. And you know what? Honestly, I'm just looking at these. They're really not that wide. 30 cents looking at this, 10 cents. For this case, I mean, someone could try to go to the December's and they're slightly wider. I'm going to go a little shorter. I'm going to sell, in this case, the 62.5. And what I'm going to do first is I'm going to buy the 55. Why? Well, because remember, if we do, let's say, 5 contracts, that's the obligation to buy the shares at the strike price from now until expiration. Okay? Now, if I look at that trade by itself, there it is, the max loss. That's not a big credit. Okay? The max loss is built in. That if the stock goes to the upside, that's not where the gains are coming. The gains are coming. We're changing that first trigger to SEQ. We're clicking on that 62.5 there, and we're moving that to 5 contracts and 5 contracts. Now, what would that look like on that diagram? Well, let's pull it up. About ready to find out. Now, if I pull this up, and let's look at this, what do we have here? Okay. So the line did not really change that much. It's still pretty steep. The steeper the slope, up or down, the greater the profit or loss. The delta on this position with the downside put, it was at 490. We're at 470. Why is it lower? Why? Because we're buying the puts. Now, wonder if little Mondelez only goes up $2. Well, do the math in your head, okay? If the stock goes up $2 and you have 500 shares, you know you're probably at 1,000. Stock goes down $2, you know you're down about 1,000. Instead of taking the price movement times the number of shares, you're taking price movement times the delta. Okay? Stock goes up $2, we have a delta of 470. I'm thinking we're up 940. Stock goes down $1, we have a delta of 470. I think we're down 470. Okay? Now, let's put it in. Okay, now here's what I want you to do. In the paper money account, trade alongside us in the paper money account as a practice to learn. That's why we're here. Now, what I'm going to do is, in this case, Mondelez, now what I'm going to do is confirm and send. There it is. Now, the last 10 minutes, I want to talk about some of these commodities. Okay? Now, if I click on that, now notice the max loss is built in. Okay? Max profit infinite. How is that possible? Because you got long calls. Okay? Send the order. Now that order is just sitting right there. Now, I want to kind of talk about some of these. Now, when we think of commodity names like oil stocks or gold, etc., among others, we know that Chevron, Big Blue, it's been actually having a pretty decent trend. Has anybody been watching that? Anybody been trading that? ExxonMobil, that's had a pretty good trend. PIA didn't lead the paper money account wrong. Those shares right there, up there, and I think it's in the other account there. Check me on that. No, I think, but we had a paper trade on that in the margin account. Now, the one I want to go back to is if we said, well, what about like the third one in there, ConocoPhillips? Well, ConocoPhillips just kind of gapped up to the area of resistance. Okay. The other one I said watch yesterday is FANG. Now, we could look at FANG and actually say, oh, yeah, it popped and faded, and this is that resistance. Well, okay, this is where we might be a little different here. When we go back and kind of take a look at this, it kind of has this big old cup, kind of on the right-hand side, maybe a flag. The fact that we got up to a brand new high, if there were short sellers, they could have been stopped out of that position, okay? Now what we actually see, we don't have earnings, that already passed, and I'm going to zoom in on this right-hand side. When we get these red candles, the red candles are now the price is falling down to support. Now, when we talk about buying on a bounce or a breakout, we talk about buying on green candles. Does everyone do that? No. Some people say, look, I want to buy on red candles. Why? Because they're closer to the support level and or moving averages. Now, what we're going to do in this case is, let's say the investors, now why do they do that? If they decided, James, I want to go to FANG and I want to look and just kind of see just real quick are the options liquid? I don't see that they're really liquid here. $1.30 there, wide, they're wide. So what we're going to do in this case is we're going to use a stock position. We're going to right click on the current price, buy custom, and we're going to go, let's say, with stop. Now, what I'm going to do is I'm going to kind of say, where did the breakout happen? That breakout happened right around 203. We're going to take the 203. Okay. Now you might say, well, this is risky. I want to see the stock bounce. Then that same person says, well, now stock bounced, stock broke out. Now we're too high. This is why some people do both. The pro about this is you're close to support. The con about this is you don't have confirmation of a bounce or a breakout. Can't have it both ways. Okay. So now what I'm going to do is I'm going to set that stop at 198.94. Okay. Now I'm going to take, so second trade example, FANG, stop day GTC. And I'm going to go back and say, what's the position size? In the margin, it's going to be right around 6,100. And if I do 6,100, okay, there it is. It's going to be about 28 shares. Now, when we also talk about commodities, I want to make mention of just 3 other oil names that kind of might be at a stage. Now, remember how the stop works. If it goes down to that price or less, that stop is a trigger price. It does not state that that's going to the price is going to, the order is going to fill right at that level. It could fill at a lower price. Send the order. Now what I'm going to do is going to go back and say what other oil names kind of are standing out. APA is right at a prior high. Okay. Now we got to say, is 45 the resistance? No, 45 was the high. Okay. Both FANG and APA, FANG has more resistance than APA. APA just has a high, okay? Keep an eye on APA. If we actually said, well, what about EOG? EOG sliced through that prior high, okay? Made a brand new high. And the other one that we're going to kind of watch is EOG. Now, I take that back. We're not going to watch EOG. We're going to trade EOG. Now, let's look at EOG and kind of say, where was the resistance? The resistance was right around $60. I don't know if you're seeing this, but I'm seeing a gap on the chart. That gap is right at 60. I got right about 63. And then right above that, I probably got about 66 and change. You seeing the same thing? Now, earnings, we don't have earnings. This is upcoming dividend. Now, if we actually go back and let's go look at this and say, what do the options look like? 10 cents there. And you got on the put side about 7 cents. Now, let's say the investor said, James, I want to just come in here and I want to practice buying a call. Now, does anybody know who teaches the class on trading long options? Type in the name. Okay. I'll give you a hint. The person has red hair. Okay. Connie, give us the playlist. For crying out loud. Hand it over. Now, what I'm going to do is I'm going to click on that 310. Now, Connie's taught us well that if we buy an option that is closer to expiration, the time decay starts to go faster and faster and faster. Okay. Well, so we're really kind of looking for the move in the first 10 days. We're going to buy as a second example, okay, of a long call, third new trade that we're doing here today. We're going to buy the Oxy, the $60 call for 305. That is correct. Now Connie feels amazing. She should. Okay. Now what we're going to do is we're going to buy the long call. How much does it cost? $305. Break even, 63.05. You have a right to buy the shares at 60, paying 305 for it, got 63.05 break even, that's at expiration, infinite max gain, max loss being what the debit is. You got to remember, if we buy a call option contract, that max loss is at 305.65. Okay, now, third trade example there. So not every time we see this does it have to be a stock example. Look, some people say, look, I'm going to kind of try to leverage that trend. Now, I do want to make mention, when we talk about some commodities, I think a lot of times we always think it's oil and gold and silver and copper. Keep an eye on some of these fertilizer names, CF and ADM, okay? CF, ADM. Now, if we swing back to one other one that's kind of an offshoot, we said keep an eye on Netflix. What I want to do with you here is I want to kind of look at, now we already know it broke resistance. I want to go back and see if there's if investors are kind of slipping in there and where we kind of see some higher volume relative to the open interest. It's decent. It's not like NVIDIA or something like that, but you're seeing at the money strikes, there's quite a bit, okay? And the further here, not as much in the December. October, no, a little bit, okay? So if we look at that, keep an eye on that to see if that volume starts to build on the stock and also on the option volume. Now, the three that I want to kind of make mention of, I take that back. I'm going to fast fire a couple. When we think of gold, usually the two that we bring up is NEM and AM. Now, don't fall into this trap. It's already at a high, okay? If the U.S. government continues actually, let's say hypothetically, that they run a deficit, and then we go from 45 trillion to 50 trillion and 60 trillion and so on and so on and so on. It's not unthinkable to think that gold might not, could gold go up to 10,000? When I started investing, gold was at 200. If someone said to me that gold was going to be at 5,000 one day, I would have said, you're out of your mind, okay? You invest long enough, you live long enough, you can see some interesting trends. Finishing this out, AM, boy, it's been a steep move, hasn't it? The one that we're watching for a breakout, if I had time, would be FCX. I don't even see resistance, do you? If we're making higher lows, that resistance is probably softer than we think. Ash Gold, Anglo Gold, Barrick, okay, slicing through resistance. BHP as well, that's a higher low going into resistance. And Rio. Now, these are all ones that are kind of like puckering up, if you will, making higher lows going into this area of resistance. Keep an eye on these. I'm out of my time here today. We got a class on short verticals coming up next. If you have not subscribed to the Trader Talks channel, do so now. If you enjoyed today's video, trading with us here today on these 3 new examples here, click the thumbs up for today's video. Thank you again. Remember that all investing involves risk, and today's our focus was on commodities and really finding trends and trading those trends with stocks and options, specifically leverage. Stay tuned for our next class coming up next. Thanks again, Connie, and to all of you. Take care. Bye-bye.